Good evening, guys. Currently, it's around 9 o'clock. As today, we could have seen Nifty, Bank Nifty, Fin Nifty, and mid cap expiry. But let's look into trade analysis of Nifty as well as Bank Nifty. Coming to Bank Nifty, you can see yesterday there was good bullish momentum from Tuesday, and again also the market tried to cross this high but couldn't sustain. And clearly, you can see yesterday this order block is trying to find some confluence over here. If you consider this is a 1 minute order block, one minute order block where the market rallied upwards, and from here where the market suddenly fell down and even broke the structure towards the downside. And today you can see opening price, you can see as we have expected the market to be trading range day. Market might go between this range to this range, but you can see after this the market clearly broke the structure high as due to high volatility. And you could see India VIX was trading at around 18 on 17. You can see today India VIX fell, but you can see actually during the morning India VIX was around 18, clearly indicating good volatility. And you can see here price taking support. Again, price took support here. Again, the price took support here, and market continued further bullish. But let's break into this trade, guys, as how we usually trade. So if you consider this this candle fib, this is the 5 minute range as well as 5 minute zone as well, because of the white first candle. So this is the mid of the first candle, and you can consider this to be the 5 minute range as well. 5 minute zone. And you can see during the first session the market tried to take support from these pivot levels, as the market during pre-market, as we could have seen, taking some gapping up, but as soon as the market opened, the market went down, clearly targeting all those buyers who might have entered, and price took support from this pivot level. You can see the market neither closed below the pivot, mid of the pivot line, clearly indicating some good support zone over here. And here you can see clearly the market, if you try to plot the anchor VWAP level, you can see this is the day's anchor VWAP level. So the market rejecting price here, trying to break this structure high. This was just a range, guys. Or you can see here actually where the market actually broke towards the upside. This is where the market actually broke and closed above this zone. And if you consider this zone where it broke, you could consider this to be the order block. And you can see clearly the market, if you consider Fib 50, you can see the market came all the way here to the Fib 50 line of this order block, and the market rallied upwards. So if you consider the fib of this candle, the common point, as it is all blue towards the extreme. So if you consider this, and this, you can see the market came to 1.68 level all the way here, and here also the market rallied all the way to 2.68 level. You can see clearly. But even if you are not entered here, you could see after this bearish candle, the market tried to close below this, but you can see after this piercing of this bearish candle with this bullish momentum, you could clearly expect the market to be bullish only. But here you can see in Bank Nifty premiums, guys, you can see till 950, guys, till 950. If you consider, see, till here the market was going down itself. You can see clearly the premium decay over here, as even in both call as well as put premiums also. If you see here though till 950, if you consider this to be 950, you can see clearly till here both call and the put premiums went down. But you can see here when the market formed higher high, here the market formed lower low. So if you see here, guys, where the market from this order block broke the structure high, and the market tried to take support from this zone. And you can also find 200 moving average support as well here, clearly indicating some sort of bullishness. And you can see this zone, guys, here, and this zone here. And at the same time, you can see this and this zone, clearly indicating the market forming higher high. Here the market is forming lower low. As soon as the price took support here, you can see clearly some sort of bullishness over here, clearly indicating some kind of bullishness in the market. So you could have taken long position over here. This is the chalk, and this is another break of structure towards the upside, and you can see the last down candle towards the up move. If you consider this down candle, and towards the up move, you can see price clearly taking support from 550 level over here. This is a 550 level, as well as the breakup block level, guys. You can see there are two confluence for you to consider this to be order block. So if you try to plot the anchor wave up level, let's be this, or you can consider this to be order block. So if you consider this, you can see clearly after this bearish candle, the market trying to close or appears above this candle, this three candle structure. You can see, guys, usually market would appears with one candle itself towards the upside, but here it took more three candles for the bullish momentum to continue. But if you try to plot anchor way up level here, you can see the market neither came till here, it just took support all the way here and try to head higher. And this is a 1.68 level. This is the 1.68 level. So you can see another break of structure towards the upside. This is another break of structure. And if you consider this order block over here, the common point between this, or if you try to plot fib extension levels, the common point between this, the common point between this, and the common point between this, you can see this 2.6 in confluence with 100% move. Or you could have targeted this position, the 2.68 level, in confluence with 100% level, and you could have easily exited here. So let's look at 1030. So look at this, guys. This is 1030 candle, and here is where the market exhausted. You can see the price taking at 550 level, and here it exited, and the market neither crossed this 200 moving average. And here you can see clearly the market premium is decaying too much with no further bullishness. And you can see here, and here the market faced some sort of rejection, and you can see the market clearly trading downwards. And but here where the momentum started, you can see the RSI momentum over here. Clearly the market is trying to head again, trying to support from this smooth moving average. You can see here, guys. So let's break down here what happened. You can clearly expect the market clearly broke this structure. It's a chalk formation over here. Clearly this is a chalk. And or if you try to plot the anchor wave up level here, you can see clearly the market faced some sort of rejection after this bullish move. So you could even have taken trade after seeing this rejection as well. Or if you try to plot the fib levels, the common point between this, you can see the market here in confluence with 550. This is a 550 level. So you can see clearly, guys, the market formed a chalk. Even if the market clearly didn't form a chalk, actually if the market needs to form a chalk, it's chalk. This chalk is what we need to consider. But you can see clearly, guys, leave this chalk thing. In case if the market, you can see clearly here what was happening is that the market couldn't cross this 200 moving average. And what happened is that you can see the clear premium decay, and you can see the RSI. Also, there is market all the way from this higher level above this RSI came all the way down, and this upward momentum where the market faced some sort of rejection. And here you can see the momentum where the market seems to be bullish with good momentum, and you could have entered all the way here where the market faced some sort of rejection from 180 to, if you try to plot the fib extension levels, the common point between this and the common point between this and the common point between this, you can see the market all the way went to 2.68 level. Towards the upside, the market went all the way to 2.68 level, guys, and here the market towards the downside all the way went to 2.68 level. Or you could have considered this order block as well, where the market here, you could even consider this order block as a target, but you can see market AZC fell down, so you could have easily gained a good premiums over here as well, profit as well. Here is another order block. Here you could have expected another order block, and the market here, and this kind of sudden moves towards the downside we have expected even yesterday. Also, you can see clearly where the market fell abruptly towards the downside, and here also the market came down. So you could have expected this kind of move, that such moves would be possible. And you can see clearly here this anchor wave up level here trying to take some support over here, and it's forming some kind of rounding top over here. We'll come to it later, guys. But let's see. See, after this fall towards the downside, the market rallied upwards suddenly. And if you try to plot the fib levels, the common point between this and the common point, if you consider this swing high structure, the market here was facing some sort of rejection here. This is the fib level from upside. And if you consider from the downside, the common point between this and the common point between this. You can see here also the market kind of trading range between this zone. This is the 550. So you can see clearly, guys, here the market was, this is the seller's stop loss, is the buyer's stop loss, and you can see expect the market to trade between these ranges. And here you can see the market facing rejection, and here you can see market forming support, and here you can see clearly the market broke this VWAP level towards the upside, and again some sort of rejection. Again the market after this candle, as you can see, the buyers couldn't sell further, and this bullish piercing candle clearly signifying bullishness in the market, where the whole sentiment from bearish to bullish has been changed. So as the market closed above this high, which formed breakoff structure, and you can expect the fib levels, the common point between this and the common point here, as both is in blue, you could have expected here. This is the fib 50 level. This is a fib 50 level. So if you try to plot the anchor gap level here, you can see the price. Actually, you should actually plot here, guys. You can see if you plot this, only then you'll find this support over here. But in case if you might have seen here with this anchor VWAP level, you could have targeted this high, guys, because this anchor VWAP level you can see clearly broken towards the upside, again taking support over here. So if you, in case if you want to draw the fib extinction levels, the common point between this, the common point between here, and since all swing all is blue, all swing highs and swing lows are blue, you can consider this and this. You can easily target here. This is the 1.68 level, and this is the 100% level, guys, where you could have exited your position 100% move, or you could have targeted this swing high as well. You can see clearly the market came all the way here, and you could even target the 1 point, which is usually our target zone, and you can see clearly the market came all the way here. This is the 1.68 level, and you can see again the market formed some kind of support over here, and again the market tried to head higher, but you can see here where the market forms some sort of chalk over here. This is the chalk, and if you try to plot the fib levels, you can see clearly the market couldn't cross this level, guys. Couldn't cross the 550 level, where the market, this is the 550, and you can see clearly rounding top also, clearly indicating bearishness. And if you try to plot the anchor gap level here, you can see the price rejection from here. So in case if you want to find the target, the common point between this, the common point between this, and the common point between this, you can see the market went all the way to 100% level. This is the 100% level, guys. You can see here this swing high to swing low, the market went 100% here, and this low, this high, the market went 100% here. Are you getting it, guys? And you can see clearly where the market took support from this 100% level, and this zone is also a breakup block level, so you can consider this. Now the resistance zone can become support zone once if the market breaks the structures. So you can see clearly where the market broke here, and again you can see after market took support and rallied upwards, and again this was just to take out all those buyers who might have entered this market. And you can see some kind of trendline liquidity also here, so it has to target this kind of buyers. And you can see this momentum, guys. This is where the market, this momentum here, this is where a lot of buyers would have entered, clearly indicating some sort of bullishness. You can see clearly the market forming some kind of support. This kind of consolidation, I will show you guys how it looks like in Nifty in premium charts. Look at this, guys. This consolidation, you can see this bullish candle at 250, 257. And at 257, look at this candle, and look at this candle, guys, how bullish this candle is. This kind of consolidation usually signifies bullishness, guys. I don't know how to explain it, but if you trade, guys, you'll get an idea of how this kind of pattern, consolidation pattern, after price forming some kind of rejection over here. Or if I show you in Nifty, so I'll show you, look at this candle, guys. After 57, this is at 52. This candle, this one bullish candle, and there are 3 to 4 small candles which neither crosses the fib of this bullish candle, and you can see this fib bullish candle engulfing this previous candle. This kind of candles are always very bullish, guys. There are high chances you can keep your stop loss just below that candle, and you could have taken long position. And here you can see after this multiple rejection, when you placed anchor VWAP level over here, or in case if you might have placed here, you could have taken long position here also. After this bearish candle, the price trying to take support from here, or if you try to place anchor way up level here, you could see the same here also, where the market, this swing high, this both also are trying to form some kind of support over here. And you can see, look at this guys, you can see how the market behaved. So if I were in position, I could have taken long position, keeping stop loss just here and targeting all the way high as well. This swing high structure, this is where I would have targeted. So this is one trade where you could have taken targeting this 100% move. This was one long position, keeping a stop loss just here, targeting 100% move. And here, this is another short trade. It's very beautiful trade over here. You could have targeted all the way to, you could have targeted anywhere between this one, guys, not just this 2.68 level. And another bullish trade is this, guys, keeping your stop loss just here and targeting all the way. Look at this, guys. 1, 2, 3, 4, 5. 5 beautiful trade setups today where you could have easily taken positions. Can you get these confluences, guys? I think before when the market is in live also I've told you this position, so it's very difficult to, and it's very quite boring, guys, if I tell, like, even if you see my live trade, I have showed you to take long positions here, but that was in Nifty. But you can see clearly some kind of bullishness over here. Could have taken here also after this rejection candle over here, expecting further highs. So, and coming to Nifty, guys, let's see what Nifty has done. So in Nifty though, you can see clearly this is the pivot, and you can see clearly if you try to plot, the market tried to target all those buyers who might have entered the market. So the market has to rally downwards, and this is a 5-minute zone, as well as this is the 5-minute zone. Five-minute zone, as well as the 5-minute range of the first candle. We can see clearly here. But what we need to consider before this is, because this consolidation, this here, the last down move, which clearly broke the structure, guys, towards the upside, clearly forming break of structure over here. And this is the break of structure. It didn't even close, but you can consider because of this fair value gap, which has not been mitigated. It's not been taken out. So we can consider this fair value gap, and you can see this order block level over here. Yeah, the market came. This is 1-minute order block. 1-minute order block. And this is the 5-minute zone. And let's try to plot the anchor wave up level over here. And as I've told you guys in my live trade, you could have easily taken long positions here. Clearly, after this bullish momentum, the last swing low to swing high, the market clearly took support from this 550 level over here. This is the 550 level. And if you try to plot the fib extinction levels, the common point between this, the common point, and the common point between this, you can see the market rallied all the way to 2.68 level. You could have exited your positions anywhere here, or you could have targeted even here, or as I have told you guys, this 200 move, this I have posted you live trade itself, this 2.68 level, you could have clearly seen on my Bank Nifty analysis. And if you try to plot here the order block, the last up move, which clearly broke the structure towards the downside, this is the order block, guys, you can see clearly. So if you consider here, so the market didn't reach, you can see clearly the market actually reached here, right? It actually touched the order block also. But if you consider in a higher time frames, you can definitely consider to be this order block. So the market came all the way here, and this rejection from this candle. And after this bullish candle, you can see clearly the market, if in case if the market is really bullish, the bullishness should have been continued further towards the upside like this. But what happened is the market formed some sort of rejection. If you in confluence with Bank Nifty, you could have taken this, though I have told you guys, this I have posted in my live trade. So this is the 1.68. This one trade is enough, guys. Your day is done actually. But let's see like how what confluences we can take actually for trading purpose. And you can see here clearly that the market rejected price from here, and after these two bullish candles, you can see clearly the market exhausted. And if you try to consider this, if you market consider this swing structure over here, when the market tried to take support from here, but here the market didn't cross this high and broke this low as well. When this fib level is being broken and the market clearly closed below, you could have taken short position here, expecting this swing high, this swing 1.68 level, a minimum of this target you could have expected, but here the market came all the way to big gap as well. So in case if this is not quite contradictory, because the market, you can say here the market is trading in this range, it's not obvious, guys, because here you can see the market trying to take support from here. Here also there is an order block. You can see the last down candle before the up move. You consider this. You can consider this to be an order block, and you can see clearly here the market try to take support from here, or you can consider this to be an order flow as well. You can consider this zone, and you can see the price trying to take support from here. You could have done quick scalping after this seeing price rejection, clearly signifying some sort of bullishness. Here you could have easily scalped, and you could have made good amount of profit as well. And you can see this bullishness, guys, this bullish candle. Here is where the manipulation is there. You can see clearly that if you consider this, or if you put the anchor VWAP levels to this swing high, and if you try to plot the anchor VWAPs to this swing low, and you can see clearly that all anchor VWAPs confluence is here, guys, where the market actually here try to this last upselling candle. After this candle, the clearly market broke this low, clearly forming chalk over here. And if you try to plot the fib levels, the common point between this and the common point between this, you can see even after the market retraced to broke this 0.5, 0.68 level, you can see after this bullish candle, like the same bullish candle over here, it's followed by a reversal candle, clearly signifying bearishness. And you can see the market clearly broke towards the downside, and the market rallied here, and this is where a lot of candles confluence is there, guys. And you can see clearly this zone is where the market could have behaved in a certain way, and after this bearish candle, guys, you could have entered short position, clearly signifying bearishness in the market. So if you try to plot the fib levels, the common point between this, the common point between this, and the common point between this, you can see the market went all the way to 1.68 level. You could have easily targeted this zone or the 1 minute order block, and this is the 1 minute order block. See here the market faced some sort of rejection, again the market went here, that I'll talk to you about it later. This confluence is very needed, guys, when you see this kind of confluence where all these anchor VWAP levels forming in confluence over here. And you can see here, this is a day VWAP where the price actually took support here, support here, here. So when this support has been broken with the fair value gap here, clearly signifying bearishness. So you can see here the market broke structure towards the downside. This is the breakout structure. And these three candles which actually broke the structure towards the downside is with the fair value gap, guys. You can see clearly this is the fair value gap. And you can see this fair value gap here the market faced, but you can see clearly the market came all the way to 4.68 level. This is the 4.26 level, but let's hold, like you might have exited our position here itself. But here you can see that the market clearly formed some sort of trendline liquidity here, not signifying much of bearishness, and the market with a very good momentum tried to break this structure. And after this structure, the market tried to take support. This might be the 50 level, so because of this fair value gap, and after this impulsive candle, guys, there is high chances the market would continue further bullishness if the market sentiment is being bullish. But what we know here is that this candle breaking towards the downside, where the market clearly broke VWAP towards the downside, and with a fair value gap, there is a high chances that this impulsive candle might be act as now resistance, where initially it should have acted as support, and this is a fair value gap, where here you can see after this bullish momentum, followed by this piercing candle towards the downside and closing below this candle as well, clearly indicating the market sentiment is very bearish. So after this candle formation itself, you could have easily entered short position here, keeping your stop loss just here and targeting all the way to this 1 minute order block, since there is no order blocks over here. So you could have considered this also an order block, so you could have exited here itself. Or in case if you consider the swing structure here, here. So if you consider this to be the market momentum, so if you consider you can exit at 1.68 level, guys, this is what we are looking for. This one was a very good trade, and another I told you guys, this confluence. Can you remember this confluence, guys? the last up move, and after this candle where the market couldn't cross here, this is where you could have taken short position as well. So it's really good confluence, guys, for you to take short position as well. And the market did cross here this 550 level. The high chances sometimes the market might take support from this 550 level, 5 minutes on levels, but here it clearly broke. But here it couldn't cross this 1 minute order block, because here you can see the market broke the structure high with the fair value gap, guys. You can see clearly this fair value gap is where there might be a lot of liquidity, and the market came all the way to this fair value gap, grabbed this liquidity, and continued further higher. You can see this bullishness candle. After this bearish candle, this bullish engulfing candle, you can see clearly engulfing one to previous two candles, signifying a lot of bullishness in the market. And if you try to plot the anchor way up level over here, you can see clearly that after here also there is bullish engulfing candle. So there are two bullish engulfing candles here, guys. So in confluence with bullish engulfing candle also, you could have taken long position, keeping your engulfing candle, and this also is an engulfing candle. You should look at candle psychology as well. Even if after this trade also you could have taken this, targeting this high, this swing high, clearly forming chalk over here. So, and you consider this to be an order block. So the market has to come grab this liquidity. Even the market didn't clearly come down. You can see this retracement also is a form of rejection. Market came here midway, again market came, and that's how the market reacted. After this also the market, after touching these order block levels, the market quickly reacted with the engulfing pattern and retraced to mid of this engulfing candle, continued further higher. I'll break it out clearly. Wait a sec. You can see clearly this is the market structure where the market touched the order block and formed a bullish engulfing pattern over here. And if you consider this candle over here, the common point here, you can see if you consider this candle, the market didn't even close the fib of this first candle, this bullish engulfing candle, clearly indicating bullish sentiment over here. You could have clearly entered long position, guys, keeping your stop loss just below this candle. This is what I'm explaining you guys. And if you try to plot the fib extension levels, the common point between this and the common point between this and the common point between this, you could have easily targeted 1.68 level, or you could have gone all the way to 2.68 level, guys. Look at this. Just you could have tried your stop loss and you could have exited your position. This is what we are looking for. This trade confluence was very good. Here you can see 2.68 level. Here you can see another 2.68 level. I think candlestick psychology is very important, guys. If you know how candles behave, bullish engulfing pattern along with order blocks, this kind of momentum is quite very important, guys, for one to analyze how trades gonna happen. So you should examine each and every candle, clearly signifying some kind of importance. You can see this after this price touching this VWAP level. You can see here the body of this previous bearish candle was being clearly engulfed by this bullish candle, clearly indicating some kind of bullishness. And you could have just kept your stop loss, or you could have entered long position here, seeing a close of this candle covering this previous body. You could have entered long position targeting this swing high also. So the market went all the way here, rejected again, further went down. After this bullish candle, you should have expected further bullishness, but here this was quite unexpected, because after this bullish candle, you can see the market clearly broke down, and after this bullish candle, the market clearly engulfed this body of this previous bullish candle, where the market sentiment would have been bullish, but here it clearly changed the perspective of market from bullish to bearish. After this candle also, you could have traded short position, keeping a stop loss about this candle, or after this also, this bearish engulfing candle also, you could have taken short position. A lot of confluence is there, guys. If you try to analyze, see after this bullish momentum, suddenly there was a rejection in price over here. After this breakdown of this reversal candle, you could have entered short position targeting this swing low or this VWAP level. Anything, guys, anything is possible. Just for scalping, it's very easy. So I think with a lot of practice, you will be able to learn, guys. Yes. As well as on February 1st, there is going to be budget day. So there is high chance that the market would go further bullish, guys. There might be huge volatility in market. So as of now, the market sentiment is bullish only. You can expect if it close above this zone or this zone, the market would continue further buying pressure towards the upside. Or if the market closes midway between this zone, the market might target these buyers who might have entered here and take support from this pivot level. So if you consider for tomorrow's pivot levels, and this is the pivot level, guys, you can see clearly here. So this might act as some sort of support here. This is the pivot level. So there are high chances the market might act support over here. Or in case if the market is clearly bullish, the market might gap up and continue further buying towards the upside. If the market sentiment is totally bullish, or else there are high chances the market might take support from here. This is the VWAP level as well as day VWAP level. There is high chances the market will continue come here all the way here or like this and continue further like this, guys. This is how the market might behave in Nifty. And if you come to Bank Nifty, this tomorrow also, this is the pivot. So the market might come midway between here. This is tomorrow's pivot level, guys. That's what I'm telling. The market might come midway between here, taking support. Or in case if the market is clearly bullish, the high chance the market would gap up, take support from this yesterday's close and continue further bullish momentum as this rally would continue further towards the upside. So let's take this out. So let's look at the premiums, guys. How because of Nifty's expiry, you can see this chart at around 950. So looking at Bank Nifty at around 950, as I have told you earlier, that here the market formed higher high. Here the market is forming lower low, and after this candle, you could have kept your stop loss with this 200 moving acting as support and this breaking this high and keeping your stop loss just below here also after this premium moves. You can see this one candle where this huge premium or after this consolidation, you can see towards the RSI here. This retracement towards the downside was like a U shape where there is market consolidating. So you could have taken long position here and just tried your stop losses or exited anywhere between this. Or if you could have seen in spot chart, you could have exited at 2.68 level. And here you can see after this top formation over here, or you could have placed your anchor way up level, and after this bullish candle forming, where the market here there wasn't much premium, you can see clearly broke all the structures towards the downside with RSI momentum towards the downside. You could have entered because in put side there was a lot of premium decay from all the way here to here. So you could have entered long position here, targeting the 200 moving average, or you could have exited anywhere between this zone, or you could have targeted this 2.68 level. As far as the market touched this 2.68 level, you could have easily exited your position, and at around 1246. So at around 1246, you can see here 1246. Yeah, this you can see where the market clearly broke structure, and this is the fib levels. Here you can see the market taking support from this 100 moving average. This is 1246. You can see here these two bearish candles and this zone, guys. Look at this zone where there is multiple support zones over here. You can see some kind of momentum here. Also, you can see some kind of momentum, and again the market came here. Again, some sort of momentum. You could have a 1246 enter long position, and you can see you could have from 77 to all the way to 179 the market had gone higher. So here is where you could have entered long position, and you can see clearly the market took support over here and again further went higher over here. And from here the market clearly formed chalk. So this was quite unexpected. The market formed chalk. And if you look at this 1246, there wasn't much premium moves towards the upside. And you could have entered long positions here, guys. Short position at 205. So if you see at around 205, you can see clearly after this bullish momentum, the market is forming some kind of U-shape momentum, guys. You can see clearly the market trying to form some kind of demand, the rounding top kind of bottom, clearly signifying bearishness, and rounding bottom signifying bullishness. So if you might have taken anywhere between this 100, from 103 it went all the way to this level 184, clearly facing some sort of rejection over here and continue further downwards. And you can see this bullish momentum clearly even broke this support zone as well. And another trade where you could have taken is this, guys. This is quite rare. Like you could have seen at around 1234. At around 1234, the market rallied here from all the way to 43 to 83, doubling this premium after this bullish engulfing candle formed. That is in Nifty, guys, but here you can see. And again, the market here couldn't cross this 200 moving averages here as well as here. So you could have taken here this trade. So keeping your resistance in perspective of option sellers, where the option sellers keeping their stop loss here and trying to sell here also. You could have entered long position, trying to buy here and expecting the market to go further high. This is how you could have traded in Bank Nifty with the premium charts. coming to Nifty, guys, let's see like how you could have traded. There was one, two, three, four beautiful trades, and this trade though I have posted you, and all my live trade I have posted this live trade to you guys. You can see clearly this trade though I have told you the 200 moving average support over here. As soon as the price taking support from this level and this pivot levels was here, I told you to take long position. So you could have easily taken long position here and targeting all the way to 2.68 level. So here is very good trade where you could have taken. And another trade is at around here. After this chalk formation, the price couldn't break this level at around 122. See at around 122 here, you can see clearly the market after this support over here, the market went high, and again the market came to this support at 122. You can see the up rally over here, and here you can see clearly the market broke all these moving averages towards the downside, clearly signifying bearishness. When this kind of thing happens on expiry days, this might act as resistance. You can see clearly here that all these moving averages has been broken towards the downside, guys. Look at this, along with VWAP, and again this retracement clearly forming some kind of support. And here is where the market premium doubled, and you can see all the way from 69 to 203x moves, guys. And you can see you could have scalped here, continued a further trade towards the downside, and the market though came too low here. And again, this is the trade, guys. You can see after price facing multiple rejections, after price taking support from VWAP and forming higher here, and after this candle or anywhere after seeing this moving averages clearly trying to break towards the downside, you could have exited your position. Or if you looked at here, you can see clearly the market here with RSI momentum. You can see this swing low and this swing low with RSI divergence. Clearly there is a lot of bullishness over here. Look at this, guys, this low, and if you consider this low, there is a huge momentum loss here, but here the price is gaining some kind of momentum, clearly indicating bullishness, guys. With this confluence also you could have entered the position, or else my 1 minute order block where the market respected my order block and this engulfing pattern, or the price taking support from this mid of this engulfing candle, anything of these confluences you could have taken, and this long position you could have easily taken from 25 all the way to 99, guys. Look at this, you could have 5x to your 4x to your capital. This is what is needed, guys. A lot of patience and a lot of looking into the details. It's not just randomly seeing the trade from far. Analyzing each and every move of what the market is trying to do is how you need to analyze the market, guys. One or the other day, you will definitely be able to beat the market and trade how the institutions trade and target all those retail traders. You just need simple things, guys. One is moving averages, one is RSI, one is VWAP, and these three concepts are enough to tackle Indian markets and any markets is also. You can easily with this moving averages, VWAP and RSI is enough, guys. Or in better confluence also you can use MACD indicator as well, which will help you. This is, guys, this is what is needed. I hope my trading knowledge is helpful, guys, for you. Please like, share, and comment. And if you have any suggestions of how I need to go through, or if you have any better ideas of trades, well, you can easily message me or comment below, guys. Thank you.